Boy, am I having a lot of recording problems today. This is a special report for Snap Inc. First off, the ticker is SNAP. It is primarily traded on the New York Stock Exchange. Current price is $17.09. 10-day average volume is 46.88 mil. 52-week high and low is $11.28, and the high is $29.44. Next earnings date is 05/08/2018, and it currently does not have a dividend. Earnings per share, negative $2.99. Price per earnings, negative $5.83. Revenue, 824.95 mil. Gross profit margin, 13.03%. Net profit margin, negative 417.61%. Return on equity, a staggering negative 152.73%. Not the best. Well, stock has been fairly newly traded in the last 2 years. Here's a 3-year weekly chart, and it doesn't even go back 3 years, but here we are of last year, a high of $29.44 right when it went public. A lot of people don't understand what a initial public offering it is. It's basically when institutions and the ground floor investors take the company public and sell shares to the common folk. Now, with that said and done, usually there's a lockup period where they're not allowed to sell shares for a certain amount of time, usually 8 months to a year. Well, in August, right here, you can see where that period ended and people were unloading the stock really, really heavily. Plus, short sellers hopping on by because every trader in their right mind knew when that lockup period was coming, a lot of people were going to cash out their shares. A lot of people got stuck in the initial public offering. A lot of millennials and gung-ho people that thought this was the next Facebook and got caught up and lost big right here. So, first off, it's been in a downtrend. It consolidated a little bit, but it hasn't proved itself yet. Don't get this confused. This is not like Facebook. Does it have the potential one day? Not for me to say. Ad revenue's there, but Facebook is a way different animal. I would rather own Twitter over Snap, and I'm not a big Twitter fan. If that says anything, what I think about Snap as an investment. Fun app, cool app, but it has a long way to go to prove itself. Toward the end here, you can see it had a little short squeeze on heavy volume where it regained between 20 to 21 before the Jennings tweet, and then it's broke back down. Now, the reason it went up on this last earnings report, it had higher revenue than expected, and more people were joining faster than Facebook, which is a positive catalyst. But like I said, way long time for it to prove anything. So what I'm looking at now is I want to be careful with a 17.09 level. The reason being, I think if it breaks 17 this week, you're looking at lower prices between 16 and 15 for sure. I don't think it's going to test its low of 11.81 anytime soon, just because it's still finding its ground. It's still finding its way to trade, and still has a lot to prove. So we need to wait a couple quarters. But in the short term, I'm not really bullish. I'm still bearish, watching that 17 level, especially with options this week. And here is a little chart just to show you. I had closing volume here toward the end of the day, which on this high day where the market's up over 300 points, it's still closed down 2%. Still really weak. So that's one thing that you got to be careful, especially when a company's so new. Even if you believe in it, don't always jump in right away. Until I see it grow a little bit. As soon as I see some good numbers come out quarterly and we start testing its all-time high, maybe. But right now, it's nowhere near it. I mean, if you remember what happened to Pandora, same concept. Everybody jumped on board, and then all of a sudden competitors came in, and Pandora is a dead stock. So food for thought. Be extremely careful on Snap, especially if you believe in the brand. Not a gung-ho investment. You can definitely short it intraday, and also scalping. Like I said, you make 5 to 8% on it. Take it and be on the short side. Here's some option volume just to show you that 17 level is going to be under pressure tomorrow, and that's where if we can bounce If we go below to like 16.50 and bounce back to 17, I consider that slightly bullish for the week, but I'm not holding my breath for it. So I give it a 2.5 out of 5 stars just because it hasn't proved itself yet. Their glasses were cool, but no one really bought them. They're expensive, and they have a long way to go. And there's a lot of institutions still wanting to unload the stock that they had originally at a higher price, especially that IPO price. I mean, it's just it's been taking a beating the last year. So be extremely careful on the bearish side. Thank you.